Hi and welcome to the Market Alert for Monday the 14th of November 2022. So the start of another week, but on Friday the dollar tumbled and extended its post-CPI while stocks kept rising. Also other news, we're seeing more selling into strength here, which is interesting, which is why JPM's trading desk isn't buying this rally, which is also an interesting comment. Pros pile into puts as stocks saw on biggest short squeeze ever. So there's a bit of rumours going on at the moment about this rally that we've seen from the 13th of October starting to fizzle a bit. Well, you'd expect that certainly. And if we're still in a bear market, then it's going to be one hell of a dead cat bounce, that's for sure. Economic news to move the markets. Well, there's only Brainard speaking today, and that's at 4:30 p.m. So after all of the UK-German action. So again, the market's going to have to make its own direction. Gold-silver ratio moving back to the upside there. So silver having fizzled out a bit with its momentum during Friday's session there. Okay, let's have a look at the stock markets. We'll kick off with the Dow from Friday. And during Friday, we can see that the market was higher, but sideways too. And overnight price is nowhere near Friday's high at the moment. So we are due for a correction in this market, as we've seen so many times in the Market Alert, from the move here all the way up to Friday's high now is over 5,000 points for the Dow there. Massive move since the 13th of October. I think it's the 13th. Yes, it is. So yeah, the daily chart starting to show bit of weakness there. We've got from here to here where the market could come down. We've got these targets here, 38 ties in with the 5 bar moving average there. So again, keep an eye on these numbers if you trade the Dow in the daily chart. In the 30-minute chart, you can see we sold off from the open, and then they brought it all the way back. And then overnight we've got a bit of a gap which hasn't been filled in the Dow. And the market's sideways at the moment, trying to get back above the 50 EMA and also the DP, which is required in order to get to the close and anywhere near Friday's high. In the German DAX, a very interesting price bar and volume for Friday. As you can see, the volume is about 85-90% of Thursday's, but the bar is a lot smaller. So there's some selling pressure around here for the market, and overnight you can see prices sideways to lower as well. I would also be inclined to draw in the fib retracements on the downside here. We've got to break the 5 to get anywhere near the 38 at the moment, but it'll be a good move down to the 5 bar moving average should the market move down to this area. In the 30-minute chart of the German DAX, you can see on Friday we had some weakness to the downside, but then once the Dow reversed and moved higher, so did the German DAX. As seen by the Dow, we're actually sitting on the DP at the moment, trying to get back up to the close, and also Friday's high there as well. So a bit of weakness around there overnight. The gap hasn't been filled, or just barely filled, perhaps with this bar here. So that's all that's required to then change direction if necessary. In the 5-minute chart, let's just have a look at overnight. You'll see the gap there. So we can actually see that the gap has been filled if we look in a bit more detail there. So the gap has been filled, which it likes to if it's going to change direction and move to the downside. But on Friday, you'll see the market down initially, and then we had a straight reversal all the way back. They're desperate to bring the market back, then back to the 200 MA, and it used that for a while, but then eventually it became a resistance, as you can see there, until the Dow got to 3 p.m. and then moved higher, and you can see there that we moved back to the upside and did this until the close. And then overnight, say we've got that gap. But at the moment, it's very important the market holds the DP and the 200 MA there in the 5-minute chart. And the same in the 30-minute, but the 30-minute, of course, only has the DP there, not the 200 MA. It's interesting how you'll find these correlations down inside of the smaller time frames as well. Oversold, and we've got a bit of volume there, not that it's worthy of anything on the overnight. but the 200 MA there as well, and the market attempting to come off this. Back to the high on this one, what we're looking at, about 80 points from where we are at the moment, which is quite easily achieved at the open. And just a quick recap on how much this market's put on since the 13th of October. And just draw this across there. You will see that we're up 2,336 points now. Massive move again, and it's the market needs to have a breather and a bit of a pullback, which, given there's no news today, it could quite easily be the case. In the S&P, same picture. Market up on Friday. Again, the volume is more or less the same, but the price action isn't. Makes you wonder whether they've just actually run the prices to the upside with derivatives on Thursday with those CPI numbers from Wednesday. And the CPI numbers on Thursday. Certainly a massive move there. And like I say, a bit of resistance there. What is it fib wise from the high down to here? We're at 78% as well, so that makes sense. We've got 89 at the 200 MA, and we're more or less overbought again, having been overbought here where the market had a breather, found demand, and was oversold, and then moved back up. So yeah, we are due for a bit of a correction in these markets. 30 minutes, again, you'll see that we were drifting down until the US opened, and then they brought the market back. In the FTSE, it was up on Friday, trading to 89% from here, down to here, all the way back, and the momentum's dropping off as well. So that's an indication that we could see some movement to the downside. Also note that we're sitting on the 5 and the 200 at the moment. We'll be desperate to try and move this higher. So let's have a look in the 30 minutes and see why. And that's because we're at Friday's low. It's very important that you get the market off the low, which is what they've managed to achieve at the moment. So I'll be looking for some sort of retracement here and holding. So with the fib extension down to here, the 89 will be very important, which takes you to Friday's low. So if the market breaks Friday's low, there's a good chance in the 30 minute we will break the black line there, which is the 30 minute, the 200 MA there in the 30 minute chart as well. But they'll do whatever they can to try and keep this momentum going to the upside. Meanwhile, in the currencies, GBP, JPY, we can see we've got demand for Friday. We're down in the lower part of the momentum there. And on the overnight at the moment, we've got an inside bar and we're sideways as well. We've also got the 78 and 89 at the 200 MA. So another spike to the downside could see support coming in at this level. 30-minute chart shows the selling on Friday. You see the demand coming in there, oversold. Then you get your retracement and they brought the market back. However, overnight in Asia, you can see there's some selling coming to the market, but that seems to have disappeared at the moment. There's bits of demand and supply absorbing the selling coming into the market is there. Need to close above the close and the 50 EMA and the 200, the DP and the BRN in order to move prices and progress them higher towards the R1 and Friday's high. In the pound, up on Friday because the dollar was down, we are seeing a bit of supply in the market there. We're down on the overnight as I record. An interesting move there. We were already oversold there. We got the demand, we've come back and we made a new high there. No divergence though. In the 30-minute chart, we moved higher from the start. As we got back to the high, they used this to buy back in with demand. You can see them buying there. And then they reversed it with the next buying bar, another green bar, and then moved prices higher as the dollar moved lower. And speaking of the US dollar, demand for Friday, a narrower bar, more volume, market up on the overnight. So trying to bring prices back there. Let's just move across here, have a look, see if we've got any sort of fib area of support. And up to here, if we come back to 78%. At the moment, like I say, we're oversold in this market as well, so due for a bit of a bounce. 30-minute chart, you'll see the down move from Friday, bit of a bounce, then down, and overnight prices have managed to move up to the DP. Found a bit of resistance there at the moment, and also a bit of divergence there as it's run out of momentum. So we could get a pullback and then start to move to the upside there. Meanwhile, in the metals, silver still managing to stay above the 200 MA on Friday. It's not looking so good today on the overnight. And if the dollar continues to move to the upside, then we're going to see silver come back below the 200 MA and see whether it holds the 21.23, which it found over here. Managed to stay above it for a few days here, but it's looking a bit precarious there, particularly if the dollar moves lower. So Friday we had a bit of a shakeout. We brought the market back, but overnight you can see we're down in the 30-minute at the 200 MA, which also ties in with the low, which is why we're seeing a bit of a bounce. Got some volume and we're oversold there as well. In the gold market, similar picture. We've got supply for Friday, the market sideways overnight, and in the 30-minute chart, less obvious to the silver move in the 30-minute, where you can see we had the sell-off, and the 30-minute in gold it held, which is why you saw the gold-silver ratio moving back up. Then gold moving back up, but overnight market breaking the DP for this market, but sitting at the 50 EMA at the moment, and trying to move the momentum back a bit to the upside there. Okay, that's it for this one. Let's see what happens with regards to the market today, as there is no economic news. There's only Brainard speaking at 4:30, so the market's got to make its own direction. And with that, as ever, thanks for watching. See you in the next one.